Hi, I'm Victoria Velazquez with Amalfi Estates, and today we are going to talk about appraisals. Okay, so today we're talking about appraisals, a truly thrilling topic, but they are absolutely critical to a transaction if you're getting financing. So I wanted to mention exactly what they are and what we do when they don't work out as planned. So if you're getting financing for a property, your lender will require at least one and sometimes up to two appraisals for the property. Now, what is an appraisal? It's when they hire a third-party company. It's not someone directly connected to the lender. So there has to be that degree of separation. They hire this company to come out and justify the price paid for the property. That's a super important distinction because a lot of people think that an appraiser is going to come out and just value the property. There are situations, potentially when you're refinancing or other scenarios where you have an appraiser out to value the property. But when it's in a transaction and you're getting a loan, the appraiser is out to justify the price paid. What that means is they know how much you are in escrow for on a property. They know how much of a loan you're getting for on the property, and they're coming out on behalf of the bank to make sure that the amount that your bank is lending you is properly collateralized with the property. Let me give you an example of what that means. If you're buying a $2 million property and you're putting 20% down, so you're getting a $1.6 million loan on the property, the appraiser is going to come out and do their analysis based on the fact that the lender is loaning you $1.6 million. Say on the exact same property, another buyer is only getting 50% of loan. So they're putting 50% down and getting $1 million loan. The appraiser would then come out to make sure that the bank was justified in lending them $1 million. The likelihood that the appraiser is going to have an issue with the 50% down property as opposed to the 20% down property is much smaller because the loan amount is much smaller. So they just want to make sure that the bank is protected. So most of the time the appraiser comes out, does their analysis, we get the report, and everything is good to go. There are certain situations where there are concerns around the property appraising. Number one, if you're putting down a really small down payment, if you're doing 5-10% down on a property, that could potentially be tougher for a property to appraise. Another scenario is if the property goes significantly over market. Say it's an incredible, one-of-a-kind, beautiful property that got multiple offers and as such went way over asking, the likelihood that it appraises is much smaller. So that then falls on both the listing agent and the buyer's agent to try to provide as much information and context to the appraiser so that they know the scenario. For example, in the scenario where it's multiple offers, you want to make sure that the appraiser is aware of that so that they understand why the buyer is willing to pay so much over asking. If there were 6 offers, they should know that. Also, appraisers aren't always super familiar with a neighborhood, which seems shocking, but it's really important to teach them about the specific nuances. They could be comparing 2 properties that they think are very similar, but if one is in an A+ neighborhood and the other one is in an A- or a B neighborhood, that could really impact values. So that's something that they may not know if they're not directly familiar. So again, super important for the agent to make sure that they know what they're doing and that they're familiar with the neighborhood and everything that comes with that. The likelihood of getting an appraisal report changed once it has already been submitted to the lender is very slim. It's rarely done, so it's really important to try to get all that information up front so that there's not an issue on the back end. However, if the appraisal report does come back and the property didn't appraise, there are a few different things that can be done. Number one, the lender will allow the buyer to pay the difference with cash, right? They're not going to be able to get their loan amount for the same that they were planning on before. They're going to have to increase their down payment. Some buyers are totally okay with that, some are not. Lastly, if the buyer doesn't want to increase their down payment or isn't able to, it's then time to go back to the seller and try to renegotiate. You really never know what's going to happen. It's going to depend a lot on the context of the situation. If there's other parties interested, or if the property's been sitting on the market, the seller will probably be much more likely to renegotiate, but you can ask the seller to come down in price to make up the difference that the loan is now no longer going to cover. I hope that was helpful. Appraisals are a critical piece of the escrow process, so please let me know if you have any questions or ever want to speak to a lender. You can reach me at 310-614-4240 or victoria@amalfiestates.com. Have a great day.